Are you looking to buy a home and tired of watching mortgage rates fluctuate? There's a way to secure a lower rate and save on interest by considering mortgage points. Hi, my name is Kevin Mitchell, your Washington Realtor with Fathom Realty. Mortgage points are upfront points that you pay to your lender in exchange for a reduced interest rate. Each point typically lowers your rate by 0.25% and costs 1% of your mortgage amount. It's important to note that mortgage points only make sense if you plan to stay in the home long enough to recoup the cost. Now, you want to calculate the break-even point by dividing the cost of the points by the amount of interest you'll save each month. Don't let rising mortgage rates stress you out. Consider mortgage points as a way to secure a lower rate and save on interest in the long run. If you plan on owning your home long-term and want to save on your mortgage rate, consider purchasing mortgage points. Do the math to see if it makes sense for your situation and save on your monthly payments. Until next time, peace.